Hello everyone, Jeff Green here once again with a market timing analysis in preparation for fiscal week 18, which starts on May 2nd, 2022. So please like and subscribe if you'd like to have updates if these recordings are any use for you. So let's take a look at what turned out to be an absolutely disastrous week. But this time I'm going to take a little different approach. We're looking at the VTI, which is the broadest sort of market ETF that you can take a look at. So I did put the green and red periods on the daily chart for last week's discussion, and I got so many good comments about that I decided to put them on the weekly chart. Now, I don't generally put them on my chart. These are sort of things that are in my mind when I'm looking at charts, but I wanted to explain how this works because I think it'll give you extra insights into what's going on with the market. So we had the announcement that the economy shrank, or the GDP shrank by 1.4% in the first quarter of this year. So clearly the recession that everybody's been talking about for the last 3 or 4 months is upon us. And we're going to talk about what that might mean for the stock prices or prices in general once we get through this sort of quick analysis here. So let's focus on the weekly chart for a few minutes. And let's talk about the weekly chart, because the weekly chart really drives your mentality on the daily chart, and you'll find out what that really means here in a minute. So let's just look at this block here. Let me get a pen. We're focusing on this block here because we're looking at a weekly chart. So these down here are all weekly indicators. So we're going to look at this time period here and sort of see when we should have been getting out of the market. All right, there's my straight line again. Must have been a good party last night. That's all I can say. Okay, so looking at this time period, that was right around Thanksgiving last year. We've got a big down week, increasing volume. We've got a MACD that's heading down. We've got a on-balance volume that's going down. We've got an advanced decline line on a New York Stock Exchange that's going down. It's going down even faster in the tech area. And then in this area here, we've got a DMI minus above the DMI plus. So that's about as bearish as you could get. So I was taking positions off and adjusting stops here in this area because you can just read the writing on the wall here. This blue line, it's a Chiku line, and I'm going to do some training sessions on this. This is such a good indicator, you just can't afford to ignore it. When this blue line is below the price line, it indicates bearish conditions. So there's another bearish thing. And actually, this line is 26 periods lagging. So you can see that there's a connection here, right? So when this line broke down below the prices, it happened right in about this area here. So that's yet another indicator that on the weekly chart, we're in a downtrend and getting worse. Now, let me just point out something that's a little bit scary here. These black lines are support lines. And they're telling me that there's really no support until we get down to this area here. Support means that we might find a decrease or a bottom potentially in the market. And that's about another 7 to 8% from where we are now. And you can see on the weekly chart, we made a new low. And most people who read my commentary and comments on social media, new lows generally lead to new lows in the same fashion that new highs lead to new highs. So this is not a time to be averaging down or taking an aggressive position on stocks. Although you could say that we might have a bounce here. We might even go up to this line. I don't think that's likely, but anybody knows. But I think the possibility of us continuing down here to this support level, which coincided with the bounce back from the COVID period back in December of a couple of years ago, I think is a real possibility. So with that in mind, we're on a weekly downtrend. Just keep that in mind here for a second. I'm going to erase all this crud. And then we're going to take a look at the daily chart, because you can think of the weekly trend as the ocean tide, right? So right now the tide's going out. We're having lower highs and lower lows. So let's take a look at what that means on the daily chart. So if I can do this properly, I'm going to take this box here, and I'm going to quite clearly extend it to Friday's disaster. Okay, Friday's disaster was on twice as much volume on a huge down day. It dwarfed the move up that we had here on increasing volume, which was encouraging. What we would have liked to have seen would have been some follow through at this level, but that didn't happen. And especially with this announcement on the GDP. So what do we have here? We've got a huge down day on increasing volume, MACD below zero, and I've mentioned this several times. Anytime the MACD is below zero, you can expect bearish conditions. There's no question about it. You can go back in history and look. I don't think you'll find many exceptions at all. Of course, you'll see bounces, right? We had a bounce here, right, that pushed us up, but we never really got into a new uptrend even from that bounce. On the unbalanced volume, that's looking horrible. Advanced decline line on the daily on the New York Stock Exchange, horrible. Tech stocks, horrible. DMI minus above DMI plus, horrible. So not only on the weekly chart are we heading down, but on the daily chart also. So what can we expect for potentially this week? Let me get my pointer back. And let me adjust this chart this way. Okay, so here's that support level we were talking about, 8% lower. I think that Monday has the possibility of being an absolute disaster, but I don't predict. I just watch the market. Me personally, I'm short and in cash, and doing bear call SPX spreads. So I make money no matter what market direction or what direction the market's going in. But I think it's potential that if we have maybe some not so bad news over the weekend over foreign money, we might see a bounce here. I'm not really confident about that. We might just see some squibbling around the line. But I think the writing's on the wall that we might go down another, like I mentioned, 7 to 8%. So my recommendation for this week, if you can't stop buying, I certainly wouldn't buy on the dips because I'm not sure we're at a bottom yet. I would err on the side of not doing anything, turn your computer off, go do something else until we sort of see a bottom that's in here, and we can sort of respond to an uptrend in prices. I think the Fed is in big trouble. Usually they increase prices when we're at a top of the economy. We are certainly not at the top. The Fed has no place to go. It's like being stuck between a rock and a hard place. If they continue to increase rates to battle the inflation that was caused not by the economy, but by printing more money in the last 5 years that's been printed in the history of the United States. That's the way I see the numbers. So it's not an economic inflation. It's a flooding the market with money inflation that is not going to be solved very easily by increasing interest rates. So that's my assessment. I hope this helps. Please like and subscribe, and I hope you have a great week.